Okay, good morning. We are now starting the second section of your Year 2 professional development, and this is going to be Office Finance for a practice. If you log on and go to Level 2 and go to the second section, which talks about Office Finance, you will see this information, which gives you some background into what it's going to be addressing. You have sections here that you can click on about Office Finance, and looking at your section assignments. We also go to the next area is Basics, just giving you a brief outline about how these basic accounting principles would apply to a dental practice. So your first assignment is here, and here is always is a little section on guidance. So what it's saying is to read the case, which is listed here, and click on that and read that brief information, and then as you notice, you'll have a quiz. You did quizzes 1 and 2 in the first section of this year when we were talking about strategic planning. Now we're going to have, I think, 6 more quizzes as they run through this section, and this is quiz 3. So go through these questions after reviewing the case and the basic information and take that quiz. Okay. I believe that's all the information for that until we move forward with the first assignment. So here is your introductory page, talking to you about the first report or information that you're going to have to put together, and it's called a balance sheet. So I urge you to, I'm not going to read through this for you as I don't in class, to look at this information. Here is an example of a blank practice balance sheet, which actually looks like the one you'll be using. The yellow squares are areas that will be calculated that you will have to enter information into once you get to that. And as we look at this, you see that it has 2 sides, one on the right and one on the left. The one on the left is your assets. So those are the things you own, as I describe it. And the right side is your liabilities, and those are the things you owe on. So as you did for a personal net worth statement last year's first years, this year we're calling it a balance sheet because it's a little different for a business. And you're going to go through and list these items that you have in your possession in this practice that add up to positives. You're going to have the left side that we'll go over in better detail about what the liabilities are, what you owe on different things as it relates to your business, and then we'll get down here and talk about the net worth and the owner's equity and how all that calculates and matters to what you're trying to do. As you see here along on this page, you've got to need to know facts, need to know applications. Those are areas that I would recommend you look at because it'll help you better understand what you're dealing with, and also recognize that you want to go through this information on brief view and need to know facts and applications before you go to quiz 4. Remember to take that, and once you've done that, now you can move on to the assignment, which also has a quiz with it, as you see. So read through this guidance, which is talking about your balance sheet, helps you understand what are the things you're putting in. A lot of it has to do with what we did the last class when we were together, in that you picked a footprint so you have an idea of what it was going to cost to finish out that space, as we discussed. And it also has equipment that you purchased, and it has a lot of other numbers that you picked that will go into this area and the next 2 assignments as well. So read through this information on guidance, read about your case that's been presented here. So here is in real numbers what Dr. Jones's balance sheet looks like. You see here he's got a bank checking account for the business. He's got equipment For dentistry, it's got office equipment, as we discussed, tables and chairs and things like that. And he's got leasehold improvements. Essentially what that is the office was a bare shell and it had to be finished out, and you had to pay for that. You had to pay for a company to come in and make you create walls and ceiling and doors and cabinets and things, and so you had to borrow money to buy your equipment, to buy office furniture essentially, and finish out the space. Where you see accumulated depreciation, all of that is calculated for you when we get to that, so that's not something you have to generate, it'll be generated for you. But your practice equipment number, your office equipment number, and your leasehold improvement numbers are all things that you got in the last class that we had formally together in the classroom. Accounts receivable is also will be calculated for you, and that will add up and give you your total assets. So he has a total assets of $596,500. When he adds up what is his equipment and furniture and finish out worth minus his depreciation, adding on to what's in his checking account, and this is what the total amount is that he owns and has value in it. But when you're running a business, you also have some liabilities. That is things you owe on. So every month you're going to owe tax, either to the state government, the federal government, or employee tax. You're going to have accounts payable, meaning you've got things you owe on, which essentially are these items over here. You're going to have short-term payable notes. You're going to have office equipment, which comes from over here as well. And in his case, as you see, we've just thrown in an interesting aside to let you see how this thing helps him establish what his net worth is or isn't. He's obviously in the middle of a divorce, and because of that, he owes his spouse this $316,000. So what we're doing initially is we're adding up these things that he owes and coming up with a total liability of the $633,800, which is less than the assets. And so in order to make the two numbers meet on both sides, you have to add a number here unless they're equal. If they're not, you're going to have to add a positive or a negative number in order to make this number and this number match. In his case, he owes more than he owns, and therefore his equity in his business is negative in order to get this amount he owes down to the same amount that he owns. Most of y'all, when you develop your plan, it won't look like that, but that's just letting you see the reality. If you owe more, regardless of what it's for in this area, than you own, you will have a negative net worth in your business. So the goal is to have as little over here as possible and as much over here as possible. So therefore your net worth in your business is higher to your advantage. So now that you've heard about that and you've read the prior things we discussed, you can take quiz 5. Here is your office balance sheet. I'm going to go down here first for you to look at it. So this looks just like what we went over. It's got the same numbers in it, the same information type in it. I've put some numbers in myself so we've got something to look at. If you go up here is your calculator. So what you're going to do is go find the annual collection amount that you chose in the last class that we had together. You picked a square footage and you picked an overhead. You picked office equipment that we reviewed, and so you can enter that number here. And I'm going to guess, if I can get this to work again, that we maybe have choices here. Yes, you do have choices of what you want this depreciation to be. But as it stated on the one example that we gave you, they were all 5%. So I would just leave it at that. And as you see, if you put cost of dental equipment here, it's going to automatically load it here. And if this is 5%, it's going to calculate it for you. So now you've got how much money you spent on your equipment and the negative amount that's the depreciation on the equipment that you'll put down below. You're going to do the same thing for this. So this says you've got 1,700 square feet of space is what you picked. And if we multiply that by $10 per square foot, that's a rough estimate of what it costs, what it's going to cost you to have chairs and tables and just regular office equipment in your office, not counting in the dental equipment. Then you picked your dental equipment and you've got that number, and as I said, it's going to then automatically calculate for you the depreciation on that. And it's also going to do it for your floor plan costs. So essentially, for the floor plan you picked, if it was 1,700 square feet, it's going to cost you $255,000 to make it look like an office without any office furniture or dental equipment in it. So that's where those figures come from that you've already picked, and the calculation is automatic for you. So if this figure here, this figure here, and this figure here are calculated for you, and you use them below in your actual practice sheet. It also gives you short-term liabilities. It calculates that for you. So it took your office overhead for the year and divided it by 12, and that's therefore a monthly office overhead, and it said your short-term liability is that figure. It calculated it again for you. And then it also calculated your long-term liability. This is all of the money you borrowed over long term to do what you're doing, and it's the balance of what that is, so it calculated that. So it brings it down here. So it's going to tell you up there how much is in your checking account and your money market. So there goes that information right there. It's also going to say up there, as we looked at, your dental equipment, depreciation, your office equipment, leasehold improvement, all of that, total fixed asset. Accounts receivable is above, created and generated for you in this calculation. You come up here and look, accounts receivable is approximately 1 to 1.5 times your monthly collection. So that's a healthy accounts receivable. If it's more than that, you're not collecting well. If it's way less than that, you may not be productive enough. Or you're just really good at collecting money. That's also possible. So again, you see a yellow area, you're going to list that number there. So this is calculated from these above. You take this and add it, and it's going to add this figure to that figure and give you your total assets. Same thing on the liability side. You've got this information up top where it calculated it for you. So you've got accounts payable, you've got long-term notes. Working capital is something you can look up as well and include or not. You've got a total on long-term liabilities, and then you've got total liabilities. So now we're looking at, because this practice is being run efficiently, it's mature and established, you've got less than $345,000 in liabilities, yet the assets are worth almost $575,000. So if you look at these two figures, they're not equal as they were in the previous example, but fortunately in this example, we can add a figure instead of subtracting. So we're going to add the amount we need to add to this figure to make it balance with that one, which means that once I look up everything that my practice owns and I subtract from that what it owes, it has a net value of $231,000 to me as a business. And that's something you, of course, want to shoot for, not only in your personal budget, but in your business budget. So again, be real careful looking at the information that it gives you and this video that you can obviously watch again, and fill in the cells in the top to get the calculations, transfer those numbers that it's generated for you down into the bottom section here. And as before, if you're having any trouble or not quite getting it, either re-review it or get with one of your classmates is understanding it and can help look at it with you and help you to understand what you're doing, because again, I'm not going to be able to meet with you, review it personally, give you feedback, give you corrections. So it's imperative that you understand what you're trying to create and that when you get to the end, it makes sense. It's no reason that any of you would have a balance sheet that didn't have a positive value in the net worth portion to equal at the bottom. And that's it for that session, and we'll start another video and talk to you about the next session.